Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, July 1, 2015. And we had an interesting day today, and there's a lot of stuff. So put on your seatbelt for a second because I've got stuff. So here we go. So here's a daily chart of the SPY. And as you can see, let's go back. I just want to review real quick where we were and where we are. So if you remember, I was indicating last week that we were going to have a turn around the weekend. And the turn seemed to have culminated with a low on Monday and then a retest of the low yesterday. And then if you remember, I also said that by Wednesday we should get going. We have to get going by Wednesday, right? So we got going a little bit. But what was interesting was I'm going to go to the intraday chart because you just need to see what goes on here in the markets, okay? So here's a 10-minute chart, and the market, first of all, the market spiked higher last night or early this morning at about a little before 5 a.m., okay? It was obviously attributed to Greece, but there's no new information in Greece. In fact, I don't know if it bothers anybody else, but it bothers me, so I'm going to give a 10-second rant. How does a media organization, for example, CNBC, how does a news organization, or what supposedly is a news organization, repeatedly report on rumors? It's mind-boggling to me that they do this and nobody says anything. All day long they report on rumors. We heard this, we got a guy who knows a guy that said this, and it's just mind-boggling. But nevertheless, here's the deal. So you had a gap up today, and you can see here, I actually took this red line out last night. Let me go back and show you where this comes from. So this was the low point, or it was the low point. 207.79 was one of the pivot lows here, and then we breached it a couple times. But that's where I had the line in before, I believe. It's on my other chart that way, so I put it back in here this way. So it doesn't matter if it's within pennies. It makes no difference. The point is this. Look what happened. We gapped up, and what you'll notice, and this is the lesson, okay? So here's what you need to realize, if you don't already, that any support level becomes resistance after it's breached, and vice versa. So any resistance becomes support. So in this case, this was prior support, and then now what happened today? We rallied up into it, or gapped up into it at the open, and it became resistance. So 1, 2, 3, 4, 5, 6, you beat on it 7 bars, okay? 7 10-minute bars, all right? So over an hour you beat on this thing, and then it couldn't hold, you couldn't close above it, and you failed. Well, you closed above it once, but it wasn't convincing. Actually, you closed above it twice. I stand corrected, pardon me. But it still failed anyway, and then you came down, made a bearish pattern, and went down for the most part through the majority of the middle of the day. Late morning through the middle of the day into the, let's call it the 3 o'clock time frame. So here's what we've got. Today, instead of a gap and go, which would have been a gap up, consolidate for a while, and move higher, you had a gap up, consolidate for a while, and crap out. But what did that really do? So let's put it in perspective here. What you did was you essentially I'm just going to use, this isn't a exact science, but I want to prove a point here. Okay, from this, actually let's take from this pivot high and see what it does. I haven't even done this yet, but I'm curious to know. So from the pivot high here, okay, which was on 2 days ago on the 29th, before we collapsed down. So this pivot high to the pivot low, okay, which was from yesterday, the lowest low, all right. All we did today was we gapped up and then we retraced down to a 382. Now let me draw it in a different way, and I'll draw it in from a low, okay, a low to today's high, okay. Oh, I always have trouble at the bottom of these charts getting it to take. There, bear with me. I'll get it. Okay. So from the low to today's high, okay, all you did was retrace 50% of the move, and then you bounced higher. So just to put it in perspective, for those of you that are paying attention to the intraday movements, that's a normal retracement. There's nothing wrong with that. Even though I would have loved to see a gap up and go, we saw a gap and retrace, and then it bounced higher. So let's go right back and review the daily chart a second here. Okay, so you had a low, you retested the low, okay, and then you came up today, retested the prior lows over here, and you stopped short of it. Now, we have the head and shoulders neckline. You're not above the head and shoulders neckline. So here's something to be aware of. I just want to recall this, and I know I talked about it last night, but it's important. If we do not close hourly above this neckline, okay, and we get to it and do not close hourly above it and fail, okay, there's a chance that we go much, much lower back down here, like I talked about last night. It could be somewhere in between from 202 to 200 and even lower. That would be the target from the head and shoulders, but I have another calculation that comes from a different method that I use to calculate price levels, and it goes all the way down to 1980, okay, 1975, 1980. So that's just something to be aware of. Got to give you both sides. But as long as we either gap up above this level tomorrow, which would be ideal, okay, that would have been the ideal scenario today. That would have been a gap and go. However, if it happens tomorrow, that would be great. And then this head and shoulders pattern would be off the table, okay, as long as we close the day above this line. And most likely you would get an equal move to what you would have seen on the downside to be the head and shoulders target down below 202, okay, you would see the equal move on the upside, and that would be ideal for the bulls, okay? So that's where we stand in the S&P, okay? Couple of things to note. Since I brought up the VIX last night, I'm bringing it up again. Remember I said that daily chart resistance was about $20? Look what happened today. We collapsed down over 13% in the VIX, and it was down most of the day today, even when the market wasn't down that much. Wasn't up that much. So what that's telling you is that the fear, okay, this is called the fear index. For those of you that don't know, this is the index that measures the option purchasing or selling in the market, okay? So it's the volatility index that measures the put and call buying. So when you have an excess amount of puts over calls, the VIX is rising. And when you have an excess amount of calls over puts or selling of the puts to liquidate positions, you have a decrease in the VIX. And that's what you saw today. Okay, so there's another thing that caught my attention, and I think it's of note, right? The IWM. The IWM was significantly weaker than the S&P today by a magnitude of a third, meaning it was, I'm sorry, 2/3. It was, let me put it this way. I don't know if I said that right. It's easier to do this. I apologize. The IWM was up about 1/3%. Okay, the S&P or the SPY was up almost 1%. Okay, it was up 0.9%. That's a big difference. Okay, so that's of note. It's not something to hang our hat on. It's something of note. We have to be aware of that type of stuff. So this isn't a head and shoulders neckline, but this is a pretty solid trend line, and you've got to recapture this trend line in order to see more upside in the IWM. But it's of note. We need to know about it. All right, that's pretty much everything I've got in the S&P, and we're basically. Oh, and for the intraday E-mini traders out there, understand that I had a target that first I thought it was going to play out today, then I thought it was going to play out tomorrow, and then I was back to today. Now I'm back to tomorrow. But either way. 2075 is a target that should be achieved early tomorrow, and it could happen overnight in the Globex session, or it could happen first thing in the morning, or both. But just like yesterday, I told my E-mini traders out there that 2075 was a target if we closed above 2054, yesterday, and we did that, and we hit 2075 in the Globex session, and then early morning session we came close, but I don't think we hit it. Let me just double check while I'm talking about it. Intraday today, I think it was just an overnight. Let me see. This was yesterday. That's not the chart I wanted. How did that happen? I'm sorry, folks. Forgive me. Let me go to the 10-minute chart. I'm looking at charts that don't look familiar. Amazing. Okay, so this was 9:30. High was 2074.50. So you tested it, did not close at it or above it, didn't even touch it, and then that was the failure, and that was down all day. So, but either way, you hit it last night in the Globex session and higher, and then you tried it again during the normal pit session and didn't do it. So, nevertheless, I have the same 2075 indicated again, and we should hit it tomorrow or in the Globex session or both. Okay, that's enough. Gold, weak. Let's go to the daily chart. Just can't get anything going in gold, and that's why I was saying that we had to close the month above 1174 in order for me to be comfortable that we were going to see higher prices. We did not close the month above 1174, although it was within the margin of error. But what happened today? We went below it. We came to the underside of it, tested it. I'll even go to the 10-minute. And what was the high here? 1169.30. What was the high here? This was at, okay, 1171 and 1172.80. So you can see, look up here. Look at the 1174. This is in the pre-market. This is in the Globex session, or the COMEX session, pardon me. And you beat on the underside of the 1174. You can see how important it is, and you failed. So there's no trade right now. You have to close above that level. You've got to get above that level for me to get interested and see a pattern developing in order to be long gold. So right now it's a non-trade. There's nothing to do. And by the way, if you don't begin to firm up and get above 1174 and the market becomes weaker and begins to close above the, below these lows here, specifically this low here, then let me just go to my notes. I have some calculations I did earlier today, and it's 1130 is a number I came up with on the downside. So I do have an 1155, you can see it here, but I also have an 1130 on the downside. I can't put it here because it's not low enough on the chart, or it's too low for this chart. So that's something to be aware of. It's a weak market right now, and you've got to see something develop that pulls the gold market above 1174 and begins to put in a pattern that tells us higher prices are coming. Other than that, right now, until you close below this low here, you're just going to chop around. But as long as if you do close below this low, you bring 1155 into the picture and 1130 into the picture if 1155 doesn't hold. So that's the story in gold. I don't have anything more. It's a weak market. There's no trade right now. Oil. Interesting in oil. We came right to the bottom trend line, and you closed pretty much on it, pierced through it, closed on it. And I drew another line in here because I did some more calculations, and I came up with $56. So, and it's going to make sense in a minute. I'm going to explain why that makes more sense in a minute. A target for $56 is in the cards in oil, and that's imminent. That's where was the low today? The low today was 56.68. So you're pretty much almost there. Do I think that's a buy level? Yeah, I think that's going to be support. I don't think the market's. Let's put it this way. If the market closes below this purple trend line that we closed on today, and hits $56, but stays below this trend line, then it's not a buy. If we hit this trend line intraday and begin to firm up and close back above where we are now, this trend line, then that would be bullish. That would be a bullish sign for the market. But let me explain something. I'm going to skip to the dollar for a second because I did some work on the dollar. It was a busy day today. And what I found is that I think and this is, the dollar is not exactly closing above this high yet, but it's close. If and when you close above this high, it's 97.75. If you get a rally in the dollar, okay, there's a high likelihood, I'm going to go back to oil, there's a high likelihood that's what's going to do it on the downside, and you may even pierce through 56 or less or below. And that would be, that would coincide with a dollar. So just want to give you the picture of all the stuff I'm looking at. I'm kind of giving you everything I've got. Let's go to the bond market. Okay. Ugly. Bond market reversed. Remember, I said this was a good bounce. We hit this 118.50, backed off, put in a pause day, a little bit of a retracement, 382 retrace from the low to the high, and then a retrace. And then you collapsed down again today, and you came into this low. So you can see how important these levels are. The 118.50 on TLT was very important. You can see that. And then you can see how important this low is. There's no two ways about it. Do I think this is going to hold? Frankly, I don't know. I just don't know. There's no way for me to tell. I have to see a pattern. I don't have a lower number indicated on the downside. If we closed below this level on a daily basis, actually it's a weekly basis, so pardon me, it's a weekly chart. So that really means, well, that's tomorrow anyway, because the week ends tomorrow, although the bond market might be opened on Friday for half a day. I'm not really sure. I have to double check that. I know the S&P E-mini is going to be open at least in the morning on Friday. I'm not exactly sure of the hours. I have to double check. But the market's closed on Friday. So all in all, the weekly close is really tomorrow as far as I think. And if you closed below the 115.43 tomorrow in TLT, that's bad news. Okay, so I will calculate that if that happens. But right now, I just don't know. There's just no way to tell. I just have no idea what's going to happen tomorrow in the bond market. Just don't know. Unlike the stock market where I said if we close above, the numbers are meshing together, 2054 yesterday in the E-mini, then that was pretty solid in my work to tell me that that 2075 was going to be in the cards. I don't have that scenario in the bond market. Sometimes I do, but right now I don't, so I can't tell you. I wish I could. I just can't. Let's go. Since we talked about natural gas last night, let's do it again. And here's a weekly chart. So let me go over to the daily, if I can get there. Okay, daily chart. And, natural gas took a dip today, went back above the 20-period moving average. Let's see where we closed. 20-period is 2821. Where do we close today? 2818. So slightly below it, but it's still in a bearish, bullish pattern. You had an up move, and you're consolidating sideways. I still think there's another up move coming in natural gas. It was a wild day. Natural gas is a wild market. It moves, has huge swings in the middle of the day. Look at this. Up, down, up, down, up. It's just crazy. Natural gas has always been known as the widowmaker. The widowmaker is pretty obvious. I know I've told you that before, but you can use your imagination. It can drive people bananas, and it can also drive people broke. So on a daily basis, all that being said, it's still a bearish. I did it again. I'm sorry, folks. It's been a long day. I did a lot of work today, and it's a bullish pattern. So up move, consolidate sideways, up move. So I think there's higher prices coming in natural gas, and we're going to have to wait till next week most likely. But I will tell you that if I'm right on the dollar over here, Okay, if I'm right in the dollar and there's higher prices coming in the dollar, you're most likely going to have to sit through, if you're long natural gas, some downside pressure in natural gas. That's just the way it works most of the time. What else do we have? How about Walmart? Look at this. That's a bottoming tail, okay? You had good volume, not spectacular volume. Average volume in natural gas. I'm sorry, folks. I'm doing a number on you guys tonight. Average volume in Walmart is about 7.7 million shares. And today you did 10.7. That's good. That's good volume. But I would have liked to see more. But this is definitely a bottoming tail. And how do you define a bottoming tail? Here's another lesson for the day. A bottoming tail is defined, or a topping tail for that matter. A bottoming tail is defined as you make a low on volume and you finish the candle finishes in the top, usually 1/3 or 25%. I'd rather have 25% of the range of the day. So you have the high, you have the low, and you finished in the top 25% of the total range of the day on volume, making a new low for the day, making a new low, period. So that classifies as a bottoming tail, so you should see follow-through in Walmart. Now, if you're going to see follow-through in Walmart, wouldn't you think that you were going to see some more upside in the market? I highly doubt you're going to see upside in Walmart without follow-through in the stock market, in the S&P, all right? So that's just food for thought. That's basically everything I have tonight. Hopefully it's helpful. Anybody has any questions, email me. No problem. I'm happy to answer them. Those of you that email me, feel free. I don't mind at all. It's my pleasure. I'm David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.